Lot of talking points, and let's welcome on board Sandip Sabharwal as well and ask him what he's making of the market right now. Sandip, hi, morning. It's really all about the banking rejigs at the top level that have happened. And let's firstly pick it up on HDFC Bank. Given the stock asymmetry as opposed to what we've seen some of the other private banks, would you say that a big overhang now gets lifted for HDFC Bank?
I would say that some overhangs off, but the big one is obviously the CEO appointment and what happens on that front. So I think that's what we need to see. But that said, I think HDFC Bank today trades at valuations which have gone into a discount to a few private sector banks also. And there are reasons for it, I think, starting from the ill thought of and NP minority shareholders, HDFC Bank merger, which obviously created a lot of issues for HDFC Bank in terms of repricing the liabilities as well as its growth path. So I think that's something that's behind. So I would think that the valuations are attractive at a price of 800 rupees. But for HDFC Bank to perform, since it's so overowned among institutional investors, we need a revival of foreign funds flows also. So I think once that starts, I think HDFC Bank should do better.
Okay. Sandip, hi. Now that you have, the private sector banks and there's a churn which is happening with respect to CFOs across all 3 or 4 private sector banks, which is there. You have a new, chairman coming in for HDFC Bank, and you said, the next big thing is to watch out for the extension for the CEO of HDFC Bank. How do you play or look at these companies for the next 6 months, especially ICICI Bank, you have HDFC Bank, you have Kotak, where there's a CEO exit and news expected. ICICI Bank, again, the extension is just for 1 year. You will have another CEO. So in next 12 months, you will have 2 to 3 new CEOs on the top three banks.
So the CEOs are very important for any corporate and also banks. So I think that's something we need to watch out for. But that said, the overall banking sector seems to be on a good footing because credit growth has reached 18%, so a high credit growth. Because last few years, despite the asset quality improvements, etc., we had seen that the credit growth was muted. I think credit growth is very strong, asset quality holding up, and most of the repricing that had to happen due to repo rate cuts is already through. So I think the margin compression is also over. We could actually see some expansions going forward. So the banking sector is very well placed overall. So I think most of the banks, especially the large private sector banks, should do well over the next 1 or 2 years.
Sandip, just want to kind of extend that point. You believe that earnings growth will be strong FY27 for private sector banks, because that's where the overhang has been, the NIM compression, the growth not coming through as strong as what most were expecting. You believe a lot of that now is behind, and this kind of growth of 17.5%, 18%, we've not seen that in, I think, over 3 years now. You believe that this is, 1, sustainable, and 2, it'll translate to EPS growth?
Yeah, obviously, because 18% credit growth is huge, and in a scenario where the NIM compression also is behind us, so that should clearly, if the large banks grow at 15 to 18%, and the NIMs also grow, so the net interest income and the grows at 15 to 18%, and then you have operational efficiency. So that should lead to very healthy profit growth. One big concern has been the difference between the growth in deposits and growth in credit, where deposit growth has clearly lagged behind. So that will also be aided by the FCNR flows. So I think FCNR flows, if they come in at the expected $50 to $60 billion, that will ease off a lot of concerns around the deposit accretion and the growing gap between deposits and credit growth. So overall, the banking sector seems to be very well placed.
Right, the auto sales for June, of course, are expected, and they're expected to remain healthy pretty much largely across segment. Tata Motors PV, M&M likely to lead the growth once again among the car makers, while Royal Enfield, TVS, Bajaj Auto are also expected to show strong data for the month gone by in the two-wheeler segment. And of course, we're awaiting our researcher to tell us what the color across the CVs is going to be like. But Kunal, very quickly on the charts, given that after a very good last week, some of these stocks came under pressure yesterday, but any top trades from within autos across the spectrum?
See, I would still believe that the likes of M&M, Eicher Motors are the ones which are still very strong on the charts. TVS Motors also, I think, apparently has done reasonably well. I think if and when the auto sector starts to get into a decent revival, these two names could probably be one of the they would be the better performers from the entire sector as such. In the emerging candidates, I was looking at the charts recently. Ashok Leyland, the stock has been holding on to that 150, 160 mark, and it's nearing a break of its 200 moving average. Slight edge with respect to that high beta nature for Ashok Leyland. So whenever the stock gets into a breakout, I believe that the intensity of breakout could be very much on the higher side. The only drag when we look at this from the entire auto pack is still the likes of Tata Motors PV, because even though the longer term charts seems to have shown signs of bottoming out at this 300 to 350 odd mark for Tata Motors PV, but the fact is that it's not being able to convert itself into any kind of a major momentum upside. So that's the only stock which is still acting as more of a drag. But most of the other charts, Eicher Motors, M&M, etc., the setup is very positive. It's just a matter of time that when the auto stocks comes back into a revival phase, hopefully in the start of the next series, if we see that happening, then I would believe one should look to bet on these larger cap names from the sector.
Kunal, aside of auto, what about some of the metal pack there? We've seen some correction coming in for many of them, especially the aluminium players, Hindalco and Vedanta Aluminium.
See, yes, Sandeep. In fact, we were making this point in the last week also that many of the metal stocks have been falling by 15% to 20% broadly for many of these names, and that too at a point when the markets have actually stabilized. So, in the tough phase of the markets, starting off from Jan 2026 onwards, metal stocks apparently as a sector had done reasonably well, but somehow in the last 1 week, 10 days, or maybe 1 month broadly, these metal stocks had corrected. The major reason for that was dollar index, rising up higher from those 99 levels to very close towards toward mark where we were heading towards. Now it looks like that dollar index has started to ebb off, and that's why I think yesterday you saw the first signs that the metal stocks are trying to make a comeback. Now there are two things which are positive for metal stocks. One is that the indicators are deeply oversold for these stocks. For the likes of SAIL, Vedanta, Hindalco, Tata Steel, etc. So that's an indication that whenever there's any kind of a revival, it could be led by a short covering as well. The second and the most important part is that the mean reversion for many of these metal stocks has completed. So after that first 3-4 months of outperformance, now these metal stocks have come back into a mean reversion. So even that sort of completed. So which means we could be at a point where a new trend for the metal stocks could start off. I would be a little selective at the start. Maybe likes of Hindalco, for example, looks attractive. Sale is something which I think has done fabulously well over the long-term charts. These could be 2 or 3 names which I would be bullish on.
Casualty yesterday was persistent after it made that announcement of acquiring Germany's Nagarro for a $1.4 billion all-cash deal. And of course, the markets reacted very sharply and very negatively. In fact, the stock closed in pretty much around the session lows, and it knocked off about over 11% in trade. Premium looks rich. It's a good 140% premium to the undisturbed price of about almost 94 odd percent. The growth dilution is definitely a concern. Integration, execution risk with a large acquisition, in any case, is a worry. And then, of course, the leverage concern as well is there. 9:30 is when we're going to be speaking with the Persistent management as well and get in more clarity on what really was the rationale behind this deal. We'll have Sandip Kalra join in. But Sandip, what's your takeaway from Persistent's big ticket acquisition?
I think you spelled out all the relevant points on whatever are the concerns. So all those points are relevant. Acquisition seems expensive, cash outflow is huge, valuation premium at which has been acquired seems not very justified to me. I think there is no reason to give such a premium. And the what it will add or in the long term is also a question mark. So I think I would think that many of the Indian IT companies have lagged behind in the AI play and now are becoming desperate to do something. And it won't be in favor of minority shareholders.
Kunal, do you see continued pressure then on Persistent today as well after that breakdown in the stock yesterday? And could that rub off on some of the other IT majors as well? Because, I mean, not very long ago, Persistent was one of the cream stocks within the IT pack and was one of the best performers till about, I think, 2 years back.
Yeah, Aisha. So I think the structure for these IT stocks, performance-wise, is definitely changing. To answer the first question, I don't expect an immediate downside for the stock price or maybe a further downside of the same degree of what happened yesterday. Generally what happens is when stock prices see that see a bout of expected negative news flow, or the markets have taken it on the negative side, you see a sharper correction, a gap down opening, and then the stock closing at the day's low. There is a hardly any major kind of a follow through for the next 1 or 2 days. Broadly, I think that after a 11% correction, I would expect maybe a 2% of a further downside for the stock price broadly for the next couple of days. But then the stock should settle back again into a trading range. So if you ask me, I think 4,200 could be a good point where, if in case the stock heads towards, contra traders can try and look at better risk reward opportunities over here for the stock price. But I also don't see this trickling to the other rest of the IT stocks, because even you look at the day like yesterday, I think till last half an hour or so, like the likes of TCS, for example, was actually trading or coming back towards the intraday highs. So even on a day like yesterday, where persistent systems was down 10-11% throughout the trading session, you did not see too much pressure adding up to the other large cap IT stocks. So that's why I would believe that this could be just about an individual stock specific reaction and may not trickle to the sector unless you have similar kind of a news flow which trickles into the other stocks.
Okay. For that, Yasha, in fact, you'll also have end of the month means auto sales, and you're likely to see those numbers trickle through as well. Sandip, anything within the auto pack? You had the Delhi EV policy, for example, which came through. It's a large one. It's an ambitious one, if I can call it that. Uh, uh, does it look interesting to you? Do you believe that there are certain players which could well benefit from that? How would you play that theme?
Yeah, so the entire ecosystem should benefit because the aim is to replace the old vehicles, and most of the large players are now present across the EV as well as the traditional IC space. So I think key beneficiaries, obviously, on the CV side will be uh, among the larger companies, Tata Motors, Ashok Leyland, and then the smaller companies which are more EV focused, they could also benefit. M&M could be a beneficiary. On the two-wheeler side, I think most of the large companies will see benefits coming through. So overall, the auto stocks have corrected during the entire Iran issue and also on predictions of a poor monsoon. But I would say that most of the negatives are really priced in. Many of the uh, companies look cheap to me relative to what the growth prospects are.
Sandeep, aside of the auto sector, one of the sectors which has been active is the textile one. You have a view on there?
I think textiles should see a good momentum with all the trade deals playing out. Last year, obviously, Indian textile companies got hit hugely because of disproportionate tariffs from the US, whereas most of the other competing countries had much lower tariffs. Now everyone is at par, so I think we are seeing momentum come through in many companies, and once the trade deals actually get fructified, then we could see more momentum, especially given the fact that the Indian currency also has depreciated much more than vis-a-vis most of the competing countries. So, during the entire fall, we have taken some position in Gokaldas exports, which I think is at the forefront of the export story in India because that stock had corrected hugely. But I think there are many other plays which could also do well.
For the newly listed or newly carved out Vedanta group of stocks, all the stocks will be out of T2T segment today. So going to be definitely in focus. Banks is where major concentration and the first trade look really would go in for. HDFC Bank, Yes Bank, Bandhan, Axis, that's going to be top on our radar. And then, of course, that little bit of weakness that played out in some of the auto names, that as well. The one other cluster which is going to be in focus is the entire infra pack, L&T, KEC, NCC, Genus Power, that entire cluster, given that Cabinet has now given approval for 30,000 crore rupee fresh investments in NIIF. So that segment as well is going to be in focus. And Sandip, you've liked some of the infra names for quite some time and you've held on to them as well. Any fresh additions within the infra pack?
No, I think the traditional ones continue, and most of the companies have significant order books and should see better execution going forward. Some of these companies, because of the presence in the Middle East, etc., or disruptions related to uh, labor availability, which is a challenge for the infrastructure sector, as well as input price spikes, have underperformed in the over the last few months. But I think the overall outlook looks fine because interest rates should remain stable, order books are strong, and we should see better execution going in this financial year.
Sandip, the other sector is the T&D sector. We've seen a lot of orders flows now coming in for KEC, for Kalpataru projects. Do you see that segment now picking up, given the fact the kind of ambitious target we have for capacities, especially in renewable energy?
Yeah, we've been holding on to some of the transmission stocks like Kalpataru for a long time, and the valuations are not very expensive. Order flows, like I said, have been strong, and the execution cycle also should be strong over the next 1 or 2 years. So there'll be so I think there are investments happening because of whatever is happening on the solar power front as well as other renewable energy investments. So there is a huge investment cycle in transmission on the transmission side, not only in India but in the Middle East, Africa, as well as the US. So I think we should see these companies continue to do well.
And from some of the EPC players like a Sterling Sterling Wilson, which also bagged some $600 million order for exports. Do you see potential for some of the EPC players, Indian EPC players, to look at global executions as well?
Yeah, so that specific company I'm not tracking, but obviously we are seeing some momentum in terms of these companies, some of the companies on the solar side getting export or significant export orders. And as the domestic backend builds up, we will see more of that going forward.
Some of the other stocks which are going to be in focus, and look out for RITES and Concor as well. They've signed an MOU for logistics infrastructure consultancy. There's SIS. They've approved a 120 crore rupee share buyback. There's SJVN. They've signed an agreement for an upcoming Himachal Pradesh hydro project. So that's going to be one stock as well, which is going to be in focus. KEC, which has also secured new orders worth about 1,754 odd crore rupees. So that's the other one. And Sterling, Sajit, you were just mentioning that. It's a $560 million for 100 megawatt solar plus 600 megahertz BSS project. So that's the other one which is also going to be in focus this morning. There's WeWork too. They've leased an additional 31,000 odd square feet at existing one of their existing centers in Hyderabad. So that's the other stock which we're also keeping on our radar. And then, of course, Ather, Ola Electric, these are going to be names which are going to be, quite on everyone's radar. The Delhi government has now approved the EV policy, and the implementation is likely from July 1st itself. Sandip, any take on these EV two-wheelers, Ola, Ather?
Yeah, so I think Ather has done very well. So I think it will continue to do well. Valuations are a bit of a concern after the current run up, but overall the company is very well placed. And so Ola, again, it's whether the story will play out or not is a question mark given the negativity surrounding its the past experience of customers. And in the meantime, companies like Bajaj, TVS, Hero, all the traditional two-wheeler companies have taken away a lot of market share. And I don't think they are going to give it away in a hurry. So I think I would still remain skeptical about Ola.
Kunal, how do you look at Ola and Ather?
See, I think Ola Electric, I think the stock is still very volatile. After this recent run up, the stock looks to be more of a stagnating around the 40 mark. I don't sense any major uptrend for the stock. But I think Ather is a brilliant chart altogether. The stock yesterday was, I think, on touching distance of breaking the 1100 mark also. It's been an excellent momentum. You look at the last, I think, 3 or 4 months from Feb or March 2026 onwards, the stock has been consistently making a pattern of higher highs and higher lows. So it goes into a sudden bout of a rally and then consolidates, comes back into a mean reversion, and then makes a new high for itself yet again. So in that aspect, I think Ether is a very positive chart. And for someone, I think, who's looking to maybe look at this in terms of riding a trend, I think Ether could be a better stock to pitch in rather than Ola.
And Sandeep, if I can quickly quiz you with regards to the real estate plays, how are you looking at that pack? You had Oberoi launch their Gurugram project, of course, awaited with regard to what kind of sales we'll see from that, but or traction, but it's expected to be a very strong launch.
Yeah, so I think the real estate segment has been somewhat of an intriguing one, whereas the companies have continued to report decent pre-sales, prices have held up, but there is a lot of skepticism among investors about whether they'll be able to continue with the sales momentum and whether there's a downturn coming sometime soon. So I think that's created the kind of correction we've seen in the real estate sector broadly. But overall, the sector seems reasonably placed. I would think that the valuations are not very expensive, and given the fact that we could now possibly rule out a interest rate hike cycle anytime in the near future, given the way commodities have cracked, we should see the real estate sector overall start to see a comeback.
Which you're liking, Sandeep, at this point?
So I think DLF is something which we hold in small quantity. We don't hold too many real estate stocks at all. But I think at these prices, I would think that it's at attractive valuations.
Any other sectors, Sandeep, that you're liking at this point of time? Sectors?
Broadly, the sector-wise, like we've discussed,
yes,
the financials, autos, even infrastructure place. So I think domestic-oriented sectors or some sectors which will benefit due to trade deals on the export side, etc., all are well placed. So I think the market is not. I would think that the second half of 26 should be much better than the first half.
Sandip, I just wanted